The following is a presentation of TFNN. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the April 17th terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's truly what it's all about. Let's go look at one of our tools. This is the tool I call sharing a win-win proposition. You know, a strong relationship is a reciprocal relationship. That's why we need to develop the ability to share. We do that each and every day here at TFNN. You know, today we've got Basil, Larry, Daryl, David, Andy, Tom, and I, and we'll share our thoughts with you on what the markets are doing. We'll use tools. You know, each of us use different sets of tools, and we assess where price is going, what's going on in the market. Now, the cool thing is that when each of us pass along something, to you, whether it's an idea, feeling, a resource, everybody wins. You know, the Tigers and Tigresses do this all day long in the Tigers Den. If you haven't had a chance to check out the Tigers Den, please do so. Go check that out. You can do it for 30 days. These folks do it on a continuous basis. I mean, sharing ideas. Think about it like this. If you share a good idea with 10 different people, they get to hear it once, and you get to hear it 10 times. It's probably going to do more for you than it is for them. Now, the absolute best investment of my time, it's sharing my thoughts and my ideas with you. The absolute best investment of my time is in the hours each day that I put into my newsletter service for my clients, looking at all the markets in an unbiased way. I have this expression. I created this many, many years ago. It goes like this. You've heard me say it every now and then, and it's this. The way you do anything is the way you do everything. And me, I believe that our capacity to grow is unlimited and it is continuous. The words I enjoy most is when someone says to me, such as somebody did this morning in an email, the power of one is a great tool. Think about that, folks. That was a tool that I developed back in the early 80s. Maybe it was 79. Yeah, it might have been 1979, 80. Somewhere right around there. Tool from a long time ago. So I appreciated that. You know, I appreciate when folks say, hey, you got me started. You turned my lights on. You turned my mind around. Or you got me thinking of both sides of the trade. All of those things are beautiful things. Folks, if you've not yet had a chance to take advantage of my win-win proposition, please do so. Go to the homepage of TFNN.com. Take advantage of my daily newsletter service, Mastering Probability. Here's the thing. It produces a positive expectancy. That means it makes money. I provide exact instructions, how many shares to buy, stops, exits, adjustment. Make sure if you're entering the trade, you've got it bracketed on both sides of the trade. I identify, not just what we are doing, but why we are doing it, which allows me to teach along the way. Look, the proposition is win-win because it also includes an education for folks out there. You know, many of us have already had something to eat today. We feed our body. The key is that we've got to feed our mind each and every day. So always remember this. Always remember this. There are no unresourceful people. There's only unresourceful states. Just change your state from one where I should do this or I could do that to I must do this. And today, folks, go touch someone's life because ultimately, you and I, we are not happy unless we found a way to contribute beyond ourselves out there. Let's go check out the markets here. Go see what kind of contribution they might be making. Right now, Dow futures up 14 points. They're trading out at 16,345. ES Mini up about 3 points, trading at 1855. NASDAQ futures up 11 points, trading at 35.12. King dollar back 138. Ticks off 13 cents, trading out at 79.74. Goldilocks not doing much, so we got a weaker dollar, and gold is not chugging along here. Something to think about. It's trading out at 13.0180. Silver is flat, trading at 19.64. Light sweet crude up 19 pennies, trading out at 103.95. Our call number is 877-927-6648. As we take a quick peek across the globe here, the DAX is up 65, FTSE up 22, about 0.7 and 0.3 respectively. Nikkei flat market out there. I mean, totally flat market. Hang Seng, I was up 64 points, about 0.3%. Shanghai off 6 points, down about 0.3%. Let's begin. Where should we begin our day? Now, I tell you where we need to probably begin our day. A lot of numbers out before and after the bell. One of the keys for us to be focused on and paying attention to is going to be Google out here. So Google, they missed their top line. They missed their bottom line. They closed at 556.54. Now, my recollection is they traded down as much as 35, maybe it was more than that last night out there, but somewhere around $35. As I say, could have even been a little bit more than that. Right now they're trading out at 548, so that's only what? That's on 48, 50, so it's $8. That is not a big deal. Why do we want to pay attention to Google? Let me put this chart up. If you're watching us on Tiger TV, thanks so much for doing that. If you're listening in on your radio, your mobile device at tfnn.mobi, we appreciate that very much. Remember, you can catch a live stream of this show by going to the homepage of tfnn.com. Upper right-hand side, you'll see a button, 3 smartphone devices on it. Click on that. The show will stream live. Of course, you can get the archive on Channel 9. Now, one of the cool things about Google, and I need to go ahead and adjust this chart for because of the stock split that they did. So all of my labels are a little bit discombobulated, but I put most of them up here. Now, what Google has a tendency to do, and I mean the probability, the correlation, it's like 80-85% out there. I haven't seen that. Maybe it's out there with some other stocks as well. But Google, what it does on its earnings date, meaning trading higher or lower, at least within the first 2 days, actually sets the tone for some time to come with inside of Google. So we know it's going to gap down this morning. The question is it going to go ahead and trade up? And if it does, that's going to be very positive for the NASDAQ, which has gotten taken apart, right? Why is that important? Because it's the second or third weighting within inside the Qs, inside the NDX 100 out there. So and it works so often. It works so often, folks. I've shared this with you really quite a while ago out there, and so it'll be very important for us to watch what actually Google does and how it trades out here. Because, really for a couple things. One, it could set up a nice trade for you. Go put the earnings dates back on your charts and go see what you can see. I don't think I have the last one out there. I know I must not because I've only got October 17th of 2013, so I'm missing the January numbers out here, and I didn't see the date. Maybe somebody out there, maybe somebody in the den might know what that date is, and I'm going to guess it was probably right around here when it had, it's probably right around this time frame here of January 27th or so. But in any event, more times than not, what Google will do is it will go ahead and it will continue to trade in the direction that takes place on the the day after earnings within a couple of days out here. Pretty amazing when you take a look at that equity. As I say, right now it's trading out at 549, so seems to be staging a bit of a comeback here, and that would be bullish. That would be positive for the at least for the week index out here, because it won't be dragging things down. And if we take a look at the week index, if I take a look at any reason, any signals here to, should we be, is it bullish, is it bearish out here? I just take a look at the 120-minute time frame chart here. Let's do that for the NASDAQ right now, and it's in bullish mode. So even after the reported earnings, and this is yesterday, let me put the crosshair up on my screen out here. So we had the market close up at its session highs in the cash market. Then we had Google out with numbers. SanDisk was out with numbers. IBM, American Express, a number of folks out with numbers. But I think it was Google's that then all of a sudden started to take the NASDAQ apart, at least the NASDAQ futures here, from closing at the session high to just moving down. And the opportunity to actually turn the market south. And look, not that it can't do it right now, but there was a real opportunity after that sell-off began. at 4 o'clock. There was a real opportunity about 6 o'clock this morning to truly start to turn things negative. That did not happen out here. That says that what we should see here is a NASDAQ. The week index continue to move higher out here. And this is, if I go and take the same 120-minute chart and we look at the, let's look at the Dow, because IBM was out with numbers. I believe they also missed both top and bottom line. So let's take a look at the Dow futures. And then I'll go see where IBM is actually trading while I'm doing that as well out here. Let me punch it in, IBM. And let's see, where is it trading at? So it closed at 196.40. It's trading out at 187.79. So, not too shabby. We'll take a look at volume. But I can tell you Dow futures have got no sell signal whatsoever in it. So they're pointing northward. The NASDAQ, which could have taken things apart, that's pointing northward out here. We'll see what happens when the market opens but there's no sell signals yet. That is most certainly the case. Let's go take a look at the S&P futures. Now, again, what I'm looking at here is the 120-minute time frame charts. We'll take a look at the daily, tells a different picture. But on the 120-minute time frame, it looks like it is full steam ahead out here, and that is what currently is going on inside the marketplace. Now, let's take a look at IBM. Let's go see where IBM is actually trading into as we speak here this morning. Give me a moment. There we go on the chart here. So we got IBM. Last trade fired off at 187.50. This stock chart looks like it did that with volume. The B point on this would have been March the 7th. 4 million shares was taken out with what? Wide price spread, accelerated volume. So there's your A to B equals CD to the upside. Let's go see what that extension is. So it made that 1-to-1 A to B equals CD, but the retracement out here was so shallow. What this really says to me is IBM actually wants higher price, wants to move up to the 203 level. Now IBM did the 1-to-1 or made the 1-to-1. I don't think did the 1-to-1. That's not very good grammar out here. But it made the 1-to-1 A to B equals CD. That was on the trading session of April 10th. Did that, formed a little shooting star candle. You know that's the cousin of the hammer out there. That says resistance is at 199.21. It is trading down at 187. 187, where's that going to take us to? 187 is going to take us right into the breakout from March 25th out there. Wide price spread, accelerated volume. We'll see if that area holds. If it does, bodes well for the Dow. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
investors. Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
TFNN is back with another Tiger Dollar special, and as part of this promotion, not only can you receive up to a 25% bonus on whatever you spend, but you can also gain access to a 5-part live webinar series with Tom O'Brien taking place the week of April 28th. Each morning during the week at 8 a.m., Tom O'Brien will walk you through how he sets up the market live and digest the previous day's trading action while analyzing overnight markets abroad in order to anticipate what kind of trading day to expect. Each 60-minute live morning webinar will be archived by around 9:30 a.m. that very morning, so that if you can't attend live, it'll be available for your viewing pleasure on demand whenever you're ready. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire. So now is a great time to lock in extra savings on all TFNN products. Don't miss out on Tom O'Brien's 5-part webinar series. Get your Tiger Dollars today with up to a 25% bonus on whatever you spend before this special is over by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's check in on some of the daily charts here for the futures contracts out here. So another nice day, in the markets out here. Yesterday, if we take a look at the week link, let's take a look at the retracement levels here. Let's go from the swing point high from March the 7th inside the NASDAQ futures on the daily contract down to the low that was put in on the trading session here of April the 15th out at 3404.75. Dead cat bounce takes up to 35.33. If we can move and close above that, what it really sets up is a move here likely into next week, into the last downdraft session, which was on April the 10th. I believe that is most likely the target level that we're looking at, 35.99.50 to be exact. Probably at that stage, if it takes into next week, somewhere around the 35.99 level, we ought to hit this trend line, this little down channel line that is drawn, and that's the red line on my screen out there, and that would likely act as a resistance level. So that's what's going on in the daily contract there. Let's take a look at the daily contract here for the Russell 2000. Let's go see what it is doing here. Let's go ahead and take a look at its retracement level. Let me go ahead and get rid of this. It did form a Gartley pattern here, intercession to move down into the swing point of February 5th. Let's just take a look at its retracement, see where it is at. We're going to do the same thing. We're going to use the swing point high. That's out at the session from March 7th. That level, 12.70 down to the low that was put in here on April 15th, out at 10.90.80. You can see it, too, has not made the dead cat bounce, the .382 retracement level. 1137.40, another 12 points higher from where it's trading at or so right now, would look to be the target line. That's inside the Russell. Let's go take a look at the ES Mini. What's the ES Mini done here? Well, it's made the .618 retracement. It made that level here yesterday. It's up at right now, which is 1857, 1858.50 really would be the number. If we take a look at the trading session here from April 17th, that's today. Hey, about that. So far, intercession high is 1857. Looks to me like, we'll find out in the ES Mini what it needs to clear from a bullish standpoint. It would need to clear 1867.50. From a bearish standpoint, you'd like to see that level hold. That's the April 10th downdraft. You're trading inside that candle session. There really is no reason for it not to. But if you do take a look at, now in the case here of the ES Mini, all the damage that was done inside of the NASDAQ, really none to speak of inside of the S&P 500. And if we just simply use our trend line, just a short-term trend line, coming off the high from April 14th, use that tab, use that high, using the high from April 10th, you'll see that yesterday price broke through that with some conviction here. Volume-wise was not too bad yesterday as well. So the 1873, the 1867.50, that looks to be the target for the S&P futures. If we take a look at the Dow futures as well out here right now, they're trading at 16,333. They're above the 0.618 retracement. They came very close to tagging the downdraft session from April the 10th out there. 16,384. Have not tagged that level. If, in fact, they can get above there, you're looking at, I would have to say you're more likely looking at a test of the highs. It's a high-volume high out there. Remember, that trading session was Jobs Friday. Both pushed higher and lower, but was volume out there. It was it's a swing point, so you've got a swing point with a high. You're trading inside it right now. The low of that swing point is at 16,312. Unless we see a complete rejection here, it says that not only should it hit the 16,426 as the next level before it really lets folks off of the elevator out there, it ought to go up and hit the 16,574. But a lot of time left in the trading session here today. Let's go check in on the currency pairs. Let's see what we've got going on here this morning early at about 6 o'clock. A nice little Gartley sell pattern that was setting up in your friend and mine. That was the euro US dollar. This is the 30-minute chart that we're looking at. And that pattern here, as you can see, it now came in with a wide-ranging bar. That suggested caution. That took place at 5:30 this morning. Lightened up a bit here coming into the 6 o'clock time frame. Look at the nice Fibonacci numbers on this pattern out here. 0.618 retracement off of its swing point high. That was from the time period of 3:30 in the morning. That was on April 11th. It goes from that high, which is a 139.04, down to a low that was put in at 5:30 in the morning on April the 15th. And that was at a low of 137.89. Forms your A to B equals C. Your A point was that low. Your B point out here came in at 5 o'clock in the morning, April 16th. Makes a 0.786 retracement. You got to love that Fibonacci number. Gets down there at 11:30 in the morning. That was yesterday out at 138.02, and then it makes completes the A to B equals CD. It does that at 6 o'clock this morning. A 1.272 expansion, a 0.618 retracement. It's a beautiful thing. And now what it's done here, let's take a look at if it's made its first move here, which would be the 0.382 retracement. No, looks like it has just a tad lower to go, maybe about 138.35. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow trading off 24 points, trading at 16,401. S&P off 3, trading at 1859. Composite down 14 points, trading out at 4,071. Russell 2,000 down 2, trading at 1129. Apple up a buck. Google off $18 right now. Chipotle leading the charge. The upside up $25 and change. SanDisk up $7, trading out at $83. United Rentals URI trading up $4, up 4%. Netflix up $260. Baker Hughes up $250. Goldman Sachs out with numbers before the bell. They're trading up $2.70. Visa up $1.36. Blackstone Group up 86 cents. Splunk up $1.37. Triple M, 3M up $1.20 to the downside. Google leading the charge to the downside. IBM off $8 right now, trading out at $187. We know that's trading into a sign of strength out there. We'll take a look at the volume. United Pacific down about 2% off $4. WellPoint Inc., WLP off $385. Humana off $398. United Health Group off $311. MoneyGram International down $274. Let's see, that's about it. Let's take a look at the Chipotle. Let's go see what Chipotle is doing. Up a nice $25 here this morning. Let's go see what kind of pattern it might have, if anything, that we can find here. So it's trading right into a resistance level, potential resistance level of the TAS signal box. That's priced out at about 570, really right where it's trading right now, right around 576. Volume, though, behind the move this morning, not too shabby, 342,000 shares. Thus far, it's got a swing point high. If it can get above this 579-ish area, it ought to go tag the swing point here from March 21st. The high of that swing point is 559.38. The bottom of that is 498. 778,000 shares up at that swing point. If it can take that out, what it will do is it'll set up an A to B equals CD to the upside. If we take a look at where that A point is inside of Chipotle, I would use as my A point. I'd use this swing point low out here That was on January 29th, 2014. That would become our 8 point. Our B point would be the swing point we're looking at from March 21st. That's your B. Your C point's going to be this low that came in here on the trading session of April the 11th. That price there, that low, 526.75. Your 1-to-1 A to B equals CD. That would take us to, come on, do this for me, would you? What the heck? There we go. Let's pull this back. It'll be a little bit easier to look at. Let me scrunch it. Scrunching is a technical term that sometimes us chartists have to use. The 1-to-1 A to B equals CD to the upside. If, in fact, Chipotle can get over that 579 level, should take price up to about the 142 area. That's if it can, 142, what am I talking about? 668 level. That's 142 points is what I'm saying off of the C point out there. That's if, in fact, it can take out that level from that swing out here, which only has volume of, from March 21st, only has volume of 778,000 shares out there. Let's see what else we have going on here. You've got Goldman Sachs. Let's go see what Goldman Sachs is doing right now. It's trading up $2, about a little over 1% out here. See what kind of volume is behind the move out here so far this morning. It's done volume of about 845,000 shares. So this thing has been in a bit of a down trend out here. Now it's completed an A to B equals CD to the downside. Well, let's take a look and see what it's done. Let's take a look at the larger A to B equals CD to the downside. The 8 point on this was the swing point back here on January 6, 2014. That high was 181. Was that the high? Yeah, 181. That looks like it was the high. 181. What was the price here? Where's the high? 181.13. The B point on this came down on the trading session of February 23rd. The low out there, 159.77. Makes the C point out here on March the 7th. That's at a high of 175.59 out there. There was a 0.786 retracement. So it did complete the 1-to-1 A to B equals CD to the downside inside of Goldman Sachs. That price projection was 154.23. Actually gapped down on April the 11th. Did it with 6.4 million shares, completed the A to B equals CD to the downside, a couple of dojis there on the next couple of trading sessions. Now it's moving higher. As it gapped up, it's giving back some of those gains out here. Where should this thing run into resistance? Very interesting. Where should it run into resistance? As long as Goldman can stay above 157.55, resistance probably about the 172-ish mark out here. But at this stage, holding 157.55 would be somewhat bullish for Goldman Sachs and set up certainly at least a retracement of the A to B equals CD pattern out here. Let's take a look at what else do we have? Let's take a look at United Rentals. URI is the ticker symbol. It's up 4% this morning. United Rentals posting revenues here of $1.18 billion. Let me see, $1.18 billion versus what? Versus 1.1 from the prior year. Net income was, come on, there you go, click down. Net income was $60 million versus $21 million. Boy, they had a nice beat on the bottom line out here, up, as I say, 4%. Let's go see what it's trading into. So it's got a bit of a resistance level at 96.72. It's trading at 95.04 as we speak right now. Boy, if it can take out that resistance level, do it with volume, that sets up an A to B equals CD to the upside inside of United Rentals. The 8 point on this that I would use, let's go take a look at that potential A to B equals CD to the upside. The A point on this is going to be your swing point from February 3rd. That low out there is at 74.32. That's your A point. Your B point, the swing that it's got to take out, let's see, April 2nd was 96.67, 96.72. That's the number. That's from the trading session of April the 1st out there, April Fool's Day. 1.27 million shares is the B point that it needs to take out. The C is on April the 7th. That low out there is at 485.01. So there's your C point, your 1-to-1 A to B equals C to your potential 1-to-1 equal A to B equals CD inside of United Rentals. Whoops. Didn't mean to do that. I meant to use the scrunch technique out there. Come on, baby. Looks like I hit the wrong button, and looks like I shut out the chart. Well, that's a darn shame, isn't it? I'm not going to do that here during this segment. I'll go back and I'll rebuild the chart here in a bit. Let's go. Let me just switch over to a different chart, and then I'll pull up United Rentals. Be much easier for me to do it like this. So let's take a look at United Rentals, URI. I should at least give you the potential A to B equals CD, the upside in this equity. So let's do this here. Guys, Stevie's got all kinds of tools. Come on. There's our A point. There's our B. There's our C. So the 1-to-1 in United Rentals, if we can take out that B point here today, tomorrow, 107.36 out there. It's just got to get above the 96.72 mark. 1.2 million shares so far this morning, 465. So if it's going to do it, today would be the day. It would easily have the opportunity because it's got the volume behind the move out there. We were talking about the euro a little earlier, and I was taking a look at the 30-minute chart now. You've got, in essence, an active Gartley sell pattern on a 30-minute chart out here. If these highs fail, if this Gartley pattern fails, the 0.618 Gartley pattern fails, that's at 1.3863. If it fails, what price will do is it'll move up to the 0.786 level. This would then set up a potential 0.786 Gartley sell pattern. That would come in right around the 1.388 level. I would imagine the swing point expansion of the B to C level, that would probably be our 1.618 area. Let's go see where that would finish. Oh, yeah, absolutely. So right now you've got a beautiful Gartley setup with all kinds of great Fibonacci numbers. Let me show you what the other pattern could look like. That's if this fails. This is not failing yet. But when you're trading, you need to know both sides of the trade out there. At least my opinion is you need to know both sides of the trade and where you put your stops, because if your reward to risk doesn't make sense, you don't want to place stops too tight out here. Here is the other pattern that would form, and you can see it also has nice Fibonacci numbers. Let me go ahead, and it's sort of colored in with yellow, so there's the expansion. So if this pattern fails, you've got to have a stop above the 138.83 level out there, and that is inside the 30-minute chart. But let's go take a look at the longer-term charts. Let's go see what the daily has to say for us, what the weekly has to say for us. Let's take a look at the weekly chart out here. Our week obviously ends here in the trading sessions, and but the currency markets, they'll be open, should be open tomorrow, I believe. And in any event here, if we take a look at the weekly chart, right now you've got the euro-US dollar. It's up over a resistance level. It's just now acting as support. That's that bearish engulfing candle from November 1st. The legitimate high out there that you would use as support would be 1.3831. You're at 1.3844 out there. So that is rejecting a support level. The weekly chart for the euro is suggesting that it wants to move higher. I would say our U.S. dollar index would actually want to move lower out here. That's what the weekly chart is communicating. At least it's communicating that to me at this stage out here. If we take a look at the monthly chart, the monthly chart is trying to break through its long-term consolidation. It's just poked its head. A definite break of that level would be a close above the March 31st high, 1.3965. That would set up around the 144.22 out there. And let's take a look. Let's wrap this up. Let's take a look at the daily chart here. Daily chart shows the euro has moved down on that point on that 30-minute chart here. We were taking a look at the Gartley sell. You can see that had moved down into the at least early this morning. It moved down into the support line of the old resistance level, and that now is new support out here. So that's on the euro-U.S. dollar. If we go check in on your favorite currency pair, because it certainly is mine, that would be the euro-Japanese yen. What's the euro-Japanese yen doing? It has rejected the lows out here. Those lows here of this breakout session, wide-ranging bar, that was formed on March the 6th, and if those lows get taken out, then they will have a confirmation that this market wants to turn south. Future Dow's off 26 points. S&P is down 1 right now. Really not a whole lot of damage considering some of the earnings reports that were out there. The currency pair here, euro, Japanese yen right now, trading slightly higher from yesterday's closeout here. It's really been kind of consolidating towards these lows. If we take a look at its retracement here, let's see what kind of retracement level it has hit from the swing point. We'll use that little doji candle from February 2nd down to the low that was put in here on April the 8th. We'll see that it is trading above the 0.382 retracement level. What this is saying to us, this currency pair actually like to make a move up to about the 142.16 level. If it does that, it ought to put some energy into the markets out here, into our stock market. So you got a nice and the markets are certainly going up on light volume. Okay. we've seen that over the past couple of days out here. But liquidity is really where it's all at. And that's what this gauge is. This is one of the gauges for liquidity. The secondary gauge out there that we could take a look at is the VIX index. Let's go see what that's trading at here this morning. It had closed below the 50-day exponential moving. Oh boy, you want to talk about? You should see a nice turnaround here this morning. At least that's what we're seeing in the liquidity gauges. If we take a look at the VIX right now, it's trading at 1377, lower than yesterday's close. When this trades below the 50-day exponential moving average, that tells you also that there's liquidity in the marketplace here. So it looks like the market is just baiting the bears out here. They're saying, come on, give me the best thing that you've got. At least that's what the current message of the markets is before the bulls actually go ahead and unleash out here. But right now you've got two liquidity gauges that say, hey, this market wants to move higher. Let's go take a look at a third gauge out here for me. I got to switch tabs. Give me a moment to do that. As I'm doing that, I'm looking to see what we've got. Okay, net declining issues inside the New York Stock Exchange right now, minus 30. It needs minus 380 in order for the bears to take back control of the market out here. The bulls effectively took control of the New York Stock Exchange yesterday. Right now, New York Stock Exchange is flat out here. So we got three nice gauges to take a look at what the markets are signaling to us as of this morning, and they're signaling that they eventually here are going to go ahead and they want higher price. At least that is the current message of the markets. Let's take a look at the commodities. Mentioned that gold really had not moved with the U.S. dollar index being down. We'll take a look at even the U.S. dollar index. You've got gold now trading down $1.80. This is a 120-minute chart on my screen out here. Significant resistance at this downdraft candle session from 10 o'clock in the morning. Again, it's a 2-hour chart that we're looking at here. That was the high of 1304.20. That is some significant resistance out here, trading out at 1301.70. However, if you switch over to the U.S. dollar index, you'll see that is trading lower out here. It is trading out at 79.75, and you're not seeing any action Jackson when it comes to gold trying to move topside out here. If we go take a look at silver, see what silver is doing here. You've got silver right now continuing to trade within its consolidation box. It looks like it wants to get down, and at the minimum, I'd have to say it's trading inside that December 31st swing point. No reason for it to not go test $18.72. That may be the test to actually take a long trade inside of silver. We've been watching the Light Sweet crew, been paying attention to it, wanting to see if it can go ahead and complete that butterfly sell pattern out here. Of course, we identified yesterday the 100% move of a move which it has made, and nothing but small-bodied candles out here. Let me tell you, the sellers are flanking this position. They are defending that swing point high for March the 3rd out there, 104.48. Every time price tries to get above that level, the sellers are coming in and they're saying not so fast. So I don't know if our butterfly pattern out here at the 106.50 level is going to get its day in the sun out here. However, there are no reversal signals yet inside of Light Sweet crude either, but it is giving a message of it is tired. It is just absolutely tired. Yesterday's message, a high wave candle, that means it has truly lost its way. That's why Stevie Son doesn't know if 106.50 will get hit. Of course, none of us do. 877-927-6648. Dow's off 38. S&P down 3. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his Opening Call newsletter. Right now, you can get a 2-week free trial to the Opening Call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Let's go see. We got a little bit of pressure here, selling pressure inside of the markets. Dow is off 53 points right now. S&P is down 5. Let's go see where the selling pressure is coming from inside of the Dow as we speak. So to the downside, IBM leading the charge. It's accounting for about 51 points of the 54 points that the Dow is down right now. You've got United Health, UNH is a ticker symbol. It's accounting for 21 points. Microsoft accounting for 3 points. DuPont about 3 points out there. Other than that, Home Depot, American Express, maybe about a point. So that's to the downside. Let's see, putting energy into it, you've got Goldman Sachs. That's accounting for about 13 points to the upside. 3M, 6 points. Chevron up 4. Visa about 4 points to the upside. Nike up 4 as well. Walt Disney about 350. Boeing 3. Let's take a look and see what's going on inside the NDX 100. Of course, we know that point-wise, out here we've got Google. That's accounting for about 5 points inside the NDX 100. NDX 100 down about 21 points right now. Microsoft picking up another 3 out there. That is about it from a large standpoint across the board. Let's see what's putting energy into it. Apple, how about that? Apple about 1 point out here. Right now, inside the NDX 100 specifically is what I'm talking about. Vodafone, SanDisk, Amazon, and Qualcomm, eBay. That is what's leading the charge to the upside. Let's take a look at what's going on inside the S&P 500 here right now. S&P 500 I don't have that same tool from a point standpoint. I can tell you, putting energy into the S&P 500 from a percentage standpoint, we've got SanDisk, Micron Technologies, Baker Hughes, Chipotle, PPG, AutoNation, Sherwin-Williams. Taken away from the S&P here this morning, specifically in this order, Western Union, this is percentage-wise, Western Union, United Health, BB&T, WellPoint, and IBM. Humana and Aetna, they too are getting hit. Let's see, on the upside here, inside of the New York Stock Exchange, let's see what's putting energy in here. Knoll Inc., KNL is the ticker symbol. That's up 11% this morning. Let's take a look at that stock chart. We often overlook the NYSE, so let me just write that down. You've got Knoll, you've got NNNET, NNI. So we're going to give those two stocks their debut here on at TFNN. Let me see to the downside. What's leading the charge inside the NYSE to the downside here? See if I can click on that real quickly. I'm going to have to be real quick about these two stocks. Barnes & Noble, Western Union, Lintuo International. Well, let's do this. Let's go ahead and take a look at at least one of these stocks. So let me get that on the screen here. KNL is the ticker symbol. I was putting some energy into the NYSE. There we go. Take a look at this. So not a whole lot of volume, but it gets its debut here at TFN. It looks like it's taking out a swing point, forming an A to B equals C to the upside here, and taking out its highs. So this is it's priced at 1908. The swing point on this is 1872, 333,000 shares. It's being taken out this morning so far with 63,000 shares and only 27 minutes of trading. Let's take a look at this. This might be for a little quick trade out here. Of course, this would be a momentum move. The 1-to-1 A to B equals CD takes you up to $20.38. Let's see if there's any friends out there at $20.39 out here. Yeah, this looks like this may want to get all the way back to the resistance levels right around the 21.78. That would be your 1 to 1.272 A to B equals CD. That was ticker symbol KNL. Let me go see what that was again. KNL. KNL, I got to type that in. Boy, I got a lot of screens and stuff. That was Knoll Inc., so up a nice 13% here this morning. Let me see what these guys actually do. They manufacture, market, and sell furnishings, accessories, textiles, fine leathers, and felt for the workplace and the home. Folks, it is Terrific Thursday if you're off to start your day. Thanks so much, as always, for joining us here at TFNN. We truly do appreciate it. Have a great day. Look forward to seeing you very soon. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.